The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Hey, another beautiful day here at the headquarters of Technical Trading and Investing, TFNN.com. It is September 11th, 2012 in Clearwater, Florida, and probably the rest of the world also. But since I'm not there, I can't verify what date it is in your area. Anyway, today's headline out here is New Sick Policy Requires 2 days Notice. All I have to now know is when I'm going to be sick. I'll have to figure that out. Anyway, we got the markets moving out here. We've had 3 days of very light volume with not much movement, up 13 points on the S&P cash right now, 2.2 billion shares. So probably coming out with about 3.1 billion shares ahead of the FOMC meeting tomorrow. Tomorrow is also Wally Wednesday. That is the day when market makers go delta neutral. I think we're probably getting some of that today, as the volume probably will be fairly light until the FOMC meeting. And then, of course, I think that they're going to have also a press conference after it. Look for lighter volume again tomorrow. I suspect what we're seeing today is somewhat options related for the end of expiration. And, you know, we continue to see the VIX move down. What is it trading out there? 15.6, something like that, off 42 cents today. For all the things that this market could have, it does not one thing, it doesn't really think that there's any downside to this market. I think that that is always the thing that scares me the most. Could we bounce up another 20 points or something? Yeah, I put the odds fairly low. We're probably somewhere around the high through expiration, I would suspect. The question is whether or not we go much lower. And a lot of these stocks are hitting highs or going through highs and running some shorts today, at least a few shorts. But for the most part, not the kind of action you like to see at highs, even though we've had some nice bounces in some of these stocks. Some of them I'm short on. We covered UA yesterday, but I still have one that's up, you know, a little bit. A couple of them that are up a little bit, but nowhere close to my stops yet. So pretty happy about that. But we'll know within the next 2 days, I suspect, that there will be no deal before Christmas, and we're probably going to see the mass exodus of politicians gone and come back probably between the Christmas and New Year's holiday, and maybe they'll put something together. But right now, looking very dim in that there's only one half of the deal, and that is higher taxes. There is nothing approaching the $4 trillion that the House Republicans are looking for over the next 8-9 year budget battle with Medicare recipients and Social Security recipients taking $3 for every $1 that they took in. It is the one thing that no one wants to touch, but destined to fail. It's kind of like actually seeing the iceberg with the Titanic, but no one having the leadership skills to actually lead in this. Wouldn't really say that we've got much leadership in the House Speaker or the President, and basically the fish rots at the head. We should be seeing extreme leadership right now from the President, and we're probably going to see about what we see now, which is nothing. I think the plan all along was to take us to the cliff and take us over, and pretty much that gets them everything that they particularly want, be able to blame it on someone else. But you know, at least we're going to get some austerity out of it that we desperately need. in the United States, and we'll see how it moves along. At the moment, though, I just look at this as a little bit of market gas during a week of not much news, and mostly driven by the talk of additional QE that what are they going to go to $4 trillion on the Fed's books out there, or over $4.5 trillion. It's about what we're talking about trying to save out here. Kind of interesting. Anyway, in the news, what we have, there is some new data points out. We have seen auto sales start to move up, and what we're starting to find out is out of the total loans, 24.8% of total loans in Q3 were subprime and below the credit scores that people a year ago would have to get into them. A lot of these auto sales are to weaker credit scores, and you should expect higher repossessions over the next 2 years. A lot of these are leases, and those 2-year leases are a big effort to push out as many cars as they can. My guess is that they are rightly or wrongly believing that next year we are going to be in recession, and they're trying to get a lot of that inventory and out the door before it starts. Of course, we already see that to a great extent Europe is in that recession, and we're seeing rather tepid numbers from China and the Asian Pacific Rim. But we're going to see basically the goal, I guess, or the prediction is that by mid next year we could see 50% of leases that were subprime if we continue on this scale, according to Automotive News Report. Of course, there's nothing like having a bubble by adding another bubble. European Parliament has voted to create a unified patent system for its member states. Very important for our technical exports. There will be one court and one set of rules, and there will only be 3 languages that you have to follow your patent in, instead of all the languages potentially. But it's gone through and passed fairly well. So at least one thing good out of the EU, and that is that they have streamlined at least how the patent system works over there in all the member states. A good thing for our exports, makes it a little easier. What else do we have? Tomorrow, of course, we're waiting for that Federal Reserve number. Other things that I found interesting in the news today. We found out that 100,000 people have left California over the 2011 to 2012 time frame. And most of them, or the highest percentage of them, moved to the lowest tax state in the union, that being Texas. And they are looking forward to luring more and more California companies. Of course, this is on the heels of the highest rates, including federal, will be somewhere in the neighborhood of 52 to 53% in California. And because of a bizarre turn of events in which California has their own carbon tax law, if the U.S. nationally passes one, they will have double taxation on carbon exports, which will be kind of interesting. So I think that a lot of people are looking to exit stage left, but when we see more people coming in every month to both Florida, Texas, and some other states, we're continuing to see the exodus that has, I think it was in 1988, was the high of naturalized citizens in California. All growth now is basically illegal aliens, and 100,000 people have left. People will vote with their feet. Amazon is come under the thumb of yet another state for collecting taxes, and that is Massachusetts. They basically came to the conclusion an agreement that they will start collecting taxes, some sales tax at least, to all Massachusetts residents starting somewhere around September of next year. Probably not a good thing for Amazon out there. And lastly, for those people that think that reality TV has anything to do with reality, there's a lawsuit going on now, and probably going to find out a lot about what's actually going on in reality shows. But I've known for a long time, since the first Survivor, that they were pretty much picking the winners. The producers were. It had little to do with what people saw. It was how many people would watch. They organized it to get rid of people that didn't draw, as they say in the business. But there's a law. We haven't seen much since then. The first year, someone leaked the contract for Survivor, and since then, they basically, when you go on Survivor, they take like 90% of your money, and you don't get it for a while. They kind of slowly dole it out to you. If you ever speak about it, that money is gone. So they're pretty good about managing exactly what goes on and what doesn't go on behind the screen. But Storage Wars is one of those, and they've got a lawsuit. And it goes into basically the huge manipulation. Probably the one that blows me away the most is somewhere where it's like this guy that's a repo artist, and he comes in and the cameras are there and they all fight. And at the very beginning of the show, it says, these are all recreations. So basically, it's not reality. It's total BS. But people, I don't know. Is it just because the shows are so cheap to produce that it doesn't matter? You can almost put anything on that someone would watch. But it sounds like that. I think we're going to find out a lot more, since once this goes to court, a lot of these documents are going to be opened up, and we can see a little bit more really what goes on behind the curtain. Like I said, don't pay attention to the man behind the curtain. But I've never got into Survivor or the rest of those other horrible reality shows like the Jersey Shore or the somewhat Housewives of Somewhere. But it's interesting nonetheless. Anyway, we have kind of an interesting day out here. Give me a call at 877-927-6648. That's 877-927-6648. We've got 2.3 billion shares. Probably going to come in with about 3.2 billion shares today from 2.9 billion shares yesterday, which is not a lot of encouragement, but it's not uncommon to see markets move a little bit higher into the end of the year as people give up on tax selling. My thought would be, if we get a giant surprise out here, I'd much rather be short than long. And could we get 10 points higher in the S&P for the end of the year? Yeah. 20 points, maybe. 50 points, nah. I'm pretty much saying that we're probably close to the highs within the next 24 hours of the year. At least that's what I suspect.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, we're going to go through a little of the stocks moving out there today. If there is one central theme, and that is high short interest to these stocks that are moving today. First one out here that has had a fairly decent move is C-Trip, up about 7%. Again, a lot of these, let me get this here, pop it up here. Yeah, I'm hoping the, well, unfortunately, a internet problem that we have on this machine occasionally, so I'm going to start this thing again and see if we can't get the internet to cooperate here in the studio today. Let me see, movers. Nope, not working. Sometimes it, oh, maybe I spelled it wrong. CTRP maybe? Yeah, CTRP. My error here. Anyway, which is C-Trip. We're seeing a lot of these stocks that are hugely short interest out here, making some nice little bounces, but so far not a lot of volume in any of these. C-Trip International, of course, a lot of pushing on CNBC for these stocks. I dislike any of these stocks that are from China right now. We still have all the problems with accounting issues, and I think that they're only going to get bigger. But of course, a lot of short interest because of that kind of news, and allows companies like this to, or at least stocks like this, to bounce fairly strongly. But you've got fairly high volume over the last few days as this comes into resistance levels. And for the most part, I suspect that a lot of this is driven by options expiration. Now, there are a few stocks out here that are giving some signals, and one of them is Dollar Tree. Dollar Tree is down fairly extensively. Let's see what we have up here. If I get up to here, Dollar Tree, 4.5%, 37.55 now. Off about $1.79, but what it is doing is coming down into two major lows. The first major low is August 16th, where it had 6.9 million shares at $38.40. Tested that with lighter volume. You had your bounce on November 9th on 3.9 million shares. You get your bounce. You should see this thing testing that 6.9 million shares on lighter volume, but we already have 7.5 million shares already. So when we take a bigger look at here at Dollar Tree, we're going to have to go back several years to see what this thing is looking at doing. And you could be back into the $35 range on this without probably too much problems. But 35, 27, 37, 35, 36 bucks would not be a big problem to see this thing when it busts, to find the first level of support. I didn't see if there was any particular news on that, but I will check just to make sure. I didn't see anything earlier. Headlines. Take a look. Dollar Tree's gloomy outlooks sinks discount group. So I guess they must have come out with something that dropped the chalupa in the punch bowl. Another one that's moving down, or actually moving up, is Flextronics. Huge volume and actually some nice movement out of Flextronics. And moving back into what should be fairly decent resistance level at about $6.45. FLEX is a symbol on that. Let me, what do we have here? 6 months. Let's get a little bit more out here. You had not a bad looking low out here and a buy signal. On October 31st, you had $5.61 as the low with 8 million shares. Got into it with about 4 million shares and broke through it by about 15 cents on November 16th. Closed back above it, of course, on almost half the volume. So not a bad looking chart out here. And you did get that nice little bounce out of here today. Gold is another one out here. Rheingold. Been watching a lot of these gold stocks come out here. Not looking too bad, actually. We've got a little gap that's acted as support before the last November 16th low with 1.1 million shares at $100.06. Probably going to get back into that, I imagine, tomorrow maybe, depending on what the Fed does. But we're 101.35 for the low today. But only about 400,000 shares so far. Some interesting movement out here. Looks like we're kind of range bound on a great deal of these stocks. And what's moving the market is the top 100 in the S&P and about 20 of the Dow stocks. Not a lot of movement really to speak of in the indexes for the rest of them so far today. Anyway, we come back, we're going to look at a few others.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Anyway, as we look at Randgold Resources, GOLD, everybody's been watching this for a while. I think there's some people that were trying to get short this or something, calling into the show and some of the other shows on TFNN here. But we're getting close to actually probably getting a test out here. Volume is fairly decent for a light volume retest of GOLD, Randgold Resources. Last low out here was at $100.06, 1.1 million shares. And we've got, 400,000, a little more than that so far. But look for a test right around $100. I imagine probably in the volatility tomorrow, we're going to get a lot of these tests and know a lot more about this market, whether or not we're done trading for the year and we go up one S&P point every day to the end of the year, something like that. We're seeing a little bit of weakness. I wouldn't say major, but I'm going to say minor weakness and a little bit of fade out here for the S&P at 1430 at the moment. But continuing to see 2.4 billion shares. Now, the number that would be bearish on a close today would be a close below 1424. Could it happen? Yeah. I think that we are seeing pretty much a options bounce in this market. What's going to be probably more important is what the numbers look like at about noon tomorrow and whether or not we see a lot of people dumping going into the Fed, or really do we have a irrationally exuberant market thinking that the Fed is just going to continue to shoot money out of giant money cannons at the market no matter what happens. They did that in Japan, but the question is, what does it actually buy you in the end? Massive federal debt. Does it make slaves of all of our children and our grandchildren? It certainly does. Eventually, there's always a bill to be paid, but we are living in an environment of, I'll gladly pay you for a hamburger next Thursday for one today. And we continue to look at that. Anyway, another one that looked like it was going out of business, Molycorp, just a massive short interest and bear rate on this stock. On the opposite end, a lot of people probably being short a little too long out here. We are coming back up for a test at $11.89 test out here. Looks to easily be duplicated. I suspect you might get a 50% retracement in this stock again, and that's where I might want to actually start looking at this thing if you're not just day trading these, call them what they are, short squeeze rallies for the most part. MSTR, another one of these things that had been hammered down on rather dubious news, in my opinion. That was that you have a few of these and you're going to die. My guess is that people are going to find something to kill themselves with. And probably not the worst thing that you put in your body is some high caffeine, especially when you found out that Starbucks large ventes have even more than Monster Beverages energy drinks. But again, the energy is not up here. You need a retest of the $40.06 low that we have out here, and we're probably still going to get that. And that would probably be the maybe an opportunity to buy when we see that test. We got with it. Oh, did we actually get a test? I guess we did. Sorry. Excuse me. We went below it on November 8th out here with 8.1 million shares, so half the volume. That low has been tested. That would have been the buy point, apparently. I didn't really notice that one. Another one out here in the super short stock realm is Research in Motion. Do they have a prayer in hell? The answer is no, but it doesn't matter. As long as they can keep some money coming in and run the shorts, they're natural buyers. And we're seeing no end to the amount of stocks rallying, even though they have no long-term possibilities. As far as I can tell, there's nothing that Research in Motion has shown or seen that would make us think that they are doing anything. What you do have is an opportunity to be on the short side here on a close below $12.14 as we're breaking that previous high on about half the volume. It may even go a little higher because I know everybody's going to want to short this thing. And a lot of these shorts, the old saying is a watch pot never boils. This is one that may even go a little higher out here before it eventually assumes room temperature of 0 over the next probably couple of years. But it's going to continue to be a long road for these stocks out here. So what else do we have going on? Let's see, there's a few stocks that looked like they were making signals. One of them I thought that was interesting is Waters Corporation that I'm keeping an eye on out here. Let's go to a little longer chart. This thing came down on monstrous volume back on the 24th of April, and what was that? About 4.3 million shares. We're coming back, and we finished pretty much filling this gap from all this movement. Energy coming through, not all that exciting so far, but you know, probably in a trading range. I would imagine right in here, maybe if you could get short this thing around 88 bucks, you have probably a movement back into that high 70s range. I would suspect for a while. One thing, you've got $78 as the major low with 4.3 million shares. You did test it twice on a much lighter volume at $75 and $74, 74 being the low on July 23rd, and it rallied back into that trading range. But I would say you probably have a narrow trading range in that $88 range to $78 range. I got to take a small drink here. I got a frog in my throat. My producer brought up Jolt Cola. They made that illegal in my state. I don't know if they did in Florida here, and eventually went out of business, but I always love their ad. Twice the caffeine, twice the sugar. So anyway, we've got a phone call, and it's Janice from Pennsylvania. How you doing today, Janice?
Hi, David. I'm doing well. How are you?
One day I'm going to get rid of this cold. I'm not exactly sure when it is.
It'll be soon.
You would think. The only cure is death. That's what I've been told. Anyway, what are we talking about today?
I was listening to you talk about stocks with short interest, and I was looking at Salesforce. That seems to have that trait, a high short interest. I was wondering if eventually this would be a short candidate.
You know, if I remember right, I haven't looked it up, but they got a fairly high PE. Until really someone supplants them, I think that there are better shorts out there.
Okay.
The problem is that you really need someone to come in and start taking their business away, and I just don't see it. I'm probably going to say that there's a nice trading range in this thing, but other than that, I don't think that there's some kind of monstrous bad news coming out on it. Stock certainly doesn't look that way. It's in the right sector. Everybody's hot for it. And, of course, the problem is it's kind of like an Amazon. I mean, Amazon's PE is like 2,700, right?
Right.
And it's this. You've got a high interest in the stock from institutional buyers that are not willing to get out of this thing no matter what. I think I heard somebody today on Bloomberg say it didn't matter if Amazon came out and said that he was selling everything and burning all the money with it, that he got with it, that Amazon would still hang out. Probably a good signal that it's probably a good time to be looking at Amazon as a short. But the same thing with Salesforce, except I think people have been in Salesforce a whole lot less amount of time. Mm-hmm. And I think that it's got kind of that golden halo that you see in some of these stocks that haven't ever made any money and have ridiculously high PEs. So I think you're on the right track there. I just think maybe you're a little early in the cycle. This thing may be something that takes 3 or 6 more months to actually weaken out here. I would have loved to seen this thing come in with lighter volume. Why a short, could this thing get back down to $140 if the market decides to roll over? Yes. What I dislike is the last major high out here was April 19th at $164.75 with 3.1 million shares, and we already have that today.
Right.
So, the question is this thing going to be a breakout, not whether or not it's probably a short candidate at the moment. But I know what you're talking about. The energy is it all that exciting up to here? Could it be, like you said, high short interest? A lot of times you get this, but, if this thing can't hold above it a few days and it closes back below 164.75, and you get, let's say, like 2 days from now, light volume and it closes back below, you could have a nice little trade out here. With the VIX as low as it is, I haven't looked at the options on this, but I probably would not be playing the equity. I would probably be playing the January or February puts on any of these stocks, probably above $50 or maybe $80. And so if you find something like this, I'd be looking. Have you looked at the puts at all on this?
I actually did, yeah. I was looking at them today, and I guess what I was seeing was like the 165 seemed to be...
For January, February?
This was January.
I'd probably go out February, because if this market cracks, it's going to take 60 days, and if you're gonna be right, I think you want to be long. You want to have a lot of time on this.
Okay.
Well, we'll look at both of them. Which Januaries were you looking at?
I think it was. Let me flick back here on my screen. The 13th, was it?
160s, 180s, 120?
160s.
Okay. And you're looking at the 160 puts, right?
Right.
So, yeah, well, I see what you're looking at now. I just would, I probably don't think you have enough time in those right now.
Okay.
Because it's, I think, you know,
It needs a little bit more time.
Yeah, I'm thinking that, you know, the problem is we're going to go to Wally Wednesday tomorrow. So the chances of having it close out at almost the exact same price that it will be tomorrow are probably about 80%.
Okay.
Now, does that mean we don't get a surprise on Friday and see, you know, $500 points down on the Dow? You could. I'm just thinking that the reality of the fiscal cliff probably happens between Christmas and New Year's when people aren't paying attention to the news.
Okay.
I think they're going to bury it into something where everybody's not paying attention. Probably already know that they've got some kind of impasse already. That's my guess at the moment, anyway.
Okay.
So looking at that, I would look at the February. You got February 1.3s. See how much more it actually costs. I mean, it doesn't look to me like it's that much more to buy the 160s in February. What do we got here?
February.
Yeah, in the $6 range.
Right.
I mean, that gives you a whole another 30. See, this one's kind of a late expiration this month, so that takes us to the 21st. So you only have about 8 days out here. But if you take that to January, that gets you to the 18th of January.
Okay.
And for $6 for $160 stock, I can see what you're looking at. What I would probably look at is first thing in the morning, if this thing pops and you really still feel strong about it, I wouldn't think that those would be the February ones would probably be a bad bite, even if this thing doesn't really collapse too much, but the VIX raises.
Right.
A pretty high IV on the stock. You could probably have this thing do nothing and still come out flat if the market fails, but this one holds up. So not a bad risk reward in the options on this, and thanks for pointing it out to me. I do kind of like it, other than the fact that the high volume today.
Okay, well, I really do appreciate your all your input here, and I've been following a lot of your shorts, and actually I've done well with them.
Cool. Did you close out UA yesterday?
You know what? I didn't have that one.
Okay.
But I did have a couple of the others that were kind of moving for me in the last, I guess, 2 weeks.
Yeah.
So, but no, I did not have that one, unfortunately. I'm sorry I didn't hear that. But thank you so much.
You bet. Okay.
Bye-bye now.
Bye. Anyway, well, thanks, Janice, for the call. She's in Pennsylvania. Yeah, there's a lot of these stocks, but, you know, there is some high short interest. This thing should peter out if this is not a true breakout, but we are going to have at least the first signs of a breakout in this stock with the volume, even if it is short covering. And I can see what she's looking at in the charts. There's the energy up on the last two legs has not been all that great, but you really like to see the volume less than 3 million shares today, and I'm just not seeing that so far. We got a little break here. We'll be right back. You can always give me a call at 877-927-6648. Absent a caller, we're going to come back and look at the Volcano. Volcano Corporation. I wonder what they do.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
When we come back, we've got a caller. We're going to go to him in just 1 second. When we talk about options on the show, there's a part of game theory that you need to be thinking about, and that is, do you use options on a stock that can only move $60 or $50? A lot of times, you want to use your money effectively. You also want to reduce risk. A lot of times, less expensive stocks take a long time to break. Bigger stocks, if you're going to be right a lot of times, you're going to be right fairly soon. But one of the things you want to do, let's say if you wanted to short something like CRM, is using puts reduces your risk if you do it right. Just because they're less expensive doesn't mean that you add a lot more contracts to your position. The idea would be if you could accept let's say a $7 loss in the stock, you figure out if you were trading the equity how much that $7 would be, and then you figure out how many contracts you could get. One of the things you don't want to do is add more risk to your portfolio by buying more just because they are less, take less of your actual trading dollars out there. The idea is that, especially on puts, the idea is to reduce your risk. You do that by limiting it to whatever the $6 or $7 that we were talking about for that particular put would be. Of course, the stock could double and you could lose 100% being short the equity. At this point, you could only lose the $7 you started with, and as long as you don't buy too many contracts, you've reduced your risk. So it is a better trade, in my opinion, than a lot of times shorting a stock at $60 because you have so much more. If you're watching a stock like that to crack, probably not a huge one in that, but I've got a position on that is based on that. It's just a very inexpensive put, and I've got a long time for it to play out. Anyway, we're going to go to Muhammad in Glendale today. How you doing, Muhammad?
Okay. How are you doing, David?
Better. What's going on here with Intap?
I was wondering if it's too early to short it, or what would you do? Would you consider it as a short here?
I mean, ideally, you don't have anything to hang your hat on. So the problem is just picking a point, and the next point you've got is $36.41. I wish you had a strong down day that you were going up against, or something like that, where, like we showed in some of these other stocks that had come back to a big gap down or anything else. But I mean, the only point you have that will give you any kind of signal, I see what you're looking at. That, well, you had kind of a high volume low and then a gap back up. But in Intap, the one I actually think this is one of the stronger stocks out here, and I wanted to buy the thing and I missed it. But you had that huge volume low on May 24th that had 54 million shares. And basically you were way under it for a number of 8, 9, 10 trading days. It popped back above it. I would much rather think that this stock, or hope this stock would come back to somewhere in the $29 to $30 range on light volume, and I'd go long.
Got it.
So, I mean, to me, you've got to get up, another $2 on very light volume to think about shorting it, because natural support now is going to be extremely good right about $28. I look at some stocks that have maybe a high volume low that haven't been tested yet, but you never got anywhere close to the kind of volume you needed, which means that this thing's got a fairly decent support range, about $28. I'd look for some that maybe the bottom will fall out if the market does pull back. Okay?
Thank you so much.
You bet.
Okay.
Thanks, everybody, for all our callers. Our